Hey everybody, it's Dave. Friday, August 14th. Uh, this video is just a quick overview of the current portfolio holdings. And so, if you just want to kind of get a snapshot of what I'm looking at, you can freeze the video and get a sense. So, this week saw us put the positions on at the beginning of the week and sort of get ourselves in line with our portfolios. And what we're seeing right now is a little bit of softening in the portfolios as they sort of work down slightly, but no particularly big issues. The what I'm expecting to see over the next few weeks is, as I commented in a short-term modeling comment, was I'm thinking that the market's going to probably go up and down a little bit. You're going to get swings of pretty decent size as guys are trying to make bets. There's not a lot of people in. August tends to be a period where the market can get pushed around a fair amount just because there's not necessarily a ton of people around at any given point in the day. So um, you know just worth noting on our modeling here, just above where the cursor is that the comp rank on the S&P 500 is now 7. So that basically is at the very low end of the buy spectrum. And as the S&P 500, we get, if I'm correct, and we get, sort of this movement that's up and down over the next few weeks to the up, what we're going to probably see is we're going to see the 1 to 3 month timing indicator, work itself closer to sort of the 1 to 2 level, possibly even down to 0, depending what happens. And that's going to probably take our comp rank, into sort of this trading range. And that's kind of a significant concept, just because when you do get the model going into the trading range, it does make sense that you have to kind of take a little bit more of a tactical viewpoint, because there, as I pointed out in earlier videos, there is some opportunity these days in being tactically oriented with your portfolio, even if it's small. It's not something that has to happen a lot, but again, if you're building a portfolio, the cost to transact these days at discount brokers is so cheap. You know what? Execute even a small component of your trade. Whenever we make a decision to, or I make a decision to kind of reduce our equity holdings. Then you can do the same thing. You don't have to do it at the price I do it. You can do it differently. But the idea is to provide you a general viewpoint. But it's worth noting that sometimes when you have some very strong ranking data, again, the trend rank is probably the most important component of what it is that we look at. Except there are going to be periods where, especially with the flex weighting portfolio or flex model portfolio, where at this point, and we've explained it earlier, is that you've got a market that offers the opportunity to go up and down. There's not been a ton of gain over the last 6 to 8 months in the S&P 500, but you've been able to add some significant value added by reducing your weights and then increasing your weights. And the value added over time of even a couple of extra percent is substantial. And as you said before, there isn't a huge cost for people to do this. This isn't a sort of a pitch for discount brokers, but everybody's got such low transaction costs. We're not talking about day trading. We're talking about portfolio switches and different pieces of your portfolio. Sometimes over the course of sometimes it's a month, sometimes it's 2 months. So anyway, it's worth keeping in mind. So you can see that the updated pricing that we started this week, that some of the portfolios are off to a staggering $150 loss. And they're sort of notional 50s. And I expect that over the next few weeks that we'll see a bit of an uptick. And so the next thing I'll be looking for is probably that opportunity to kind of reduce my weights. Based on the ratings that I see, you can see that just from the point of where we started with all this, and going back to the start of August, that the base model weight was up around 90. We were up in the mid 90s in the low activity model. We were up at 150 on the aggressive tactical focus, and we were up around the 80s. So you can see right now that basically we've got almost half the positions in the little bit more of the active portfolios, and most of the stuff is down. So I expect that those numbers to continue to drop, and as I said, over the next few weeks, it'll be interesting because we'll probably be looking for a point that on the upper portfolios that if we get a bit of a pop, that's another 2 to 3%, possibly in this area. It might even not necessarily be that much. That time will pull us on side, and then what'll happen is it will take money off the table, and then we'll wait for an opportunity to get there. So portfolio updates this week. Look for this stuff usually Friday to Saturdays. I'm going to be at Chandos Lake, my cottage, so I'll probably be doing this next Friday from my upper deck because I'm working up there, or Saturday. And you know what? Good luck.